Hello and welcome to a new edition of our weekly webinar. I'm your old friend Shumoy, and I am welcoming you all on behalf of Proficient. It is 21st of September 2018, Friday. We just got a weekly closing right an hour and a half ago. And let us take a stock of the situation, how things are looking, and what can we expect going forward. Let me first start with the dollar index as usual. Then I will take a look at the gold and crude oil, that is the commodity pack, and then I will look at the equity charts. So this is the dollar index chart, and quite interesting, obviously, because after having put up a sustainable strength, dollar index actually right now looking a bit weak, and it is trading below its 50-day moving average, and it has also broken some important support levels at 94.5 regions, right now trading at 93.5, and chances are high that the 200-day moving average of 92.4 regions will be revisited. So going forward, we take a view that dollar index will remain weak, and if that is the case, if dollar index remains weak, then obviously the commodities, those are denominated in dollar terms, are likely to remain strong. So this is the chart of let me first take the chart of gold. This is a chart of gold. Not much strength as yet, but nevertheless it has formed a bottom right at around $1,180 an ounce zone. So although the trend is down, there is not much of strength, but some short-term bottom is visible, and right now it is trading tad below the 50-day moving average, which is at around $1,211 an ounce region, and if it can trade above that, this is the view that we also gave last week, but actually the breakout did not occur, so the view remains same. Gold actually has to close above 1200 and some 15 region for some short-term pullback to come, and there are chances that that will happen. If dollar index remains weak, then gold will remain strong, and it is likely to go higher, and in that case you will have to keep a stop loss at around 1200 region and take a long position in gold. Overall target will be 1260 region, that is $1,260 per ounce. So short-term bullish outlook is there in gold, and that is if dollar index continues to remain weak. Now, what is the outlook in crude oil? This is the daily chart of crude oil, as you can see. Intermediate trend is still up. It has closed above $70 a barrel, and it is staying there, but 70 region is resistance region, and it is taking some time to negotiate that resistance, but going forward we are expecting higher prices in crude oil, and if 68 levels are not broken in crude oil, then $74 a barrel region could be revisited, and a weak dollar will again help that cause. If dollar index remains weak, then we are likely to see crude oil at 74 or 75 dollar a barrel region. So that is not entirely unexpected. So that is the view in currency and commodity pack. We are expecting weakness in dollar index, and if dollar index remains weak, then gold, crude, these dollar denominated commodities are likely to rise. Now, having said that, let's take a look how US stocks have performed over the past few weeks, and then we are coming to our domestic market. This is how the US market has done yesterday. It closed at around 2930 region. I am talking about the S&P 500, which you can see here on my chart. This is called SPX, and in fact, this is our lifetime closing in S&P. Let me change the time frame to weekly, and here we go. Yeah, so nonetheless, equity markets in US are trading at their lifetime high. So trends are bullish in all major time frames. There is no doubt about that. The slope of the moving averages are also positive. Prices are above all important moving averages. Nearest support region holds at around 2850 region. So, and the series of higher bottoms are quite visible there, right? So there is little doubt about the overall US equity markets being bullish. And unless S&P really closes below 2875 region, the short-term strength is likely to continue even higher. But now let's take a look at how our domestic markets have been faring. The strength in US markets may not be reciprocated out here in our domestic equity markets, because there are several reasons. Right now, whatever you are seeing on my chart on my screen is the daily chart of Nifty, and to the right you can see how it is the daily chart, and to the right you can see how today's prices have fared. It was exceptionally volatile day today, right? It was an awesome day of extreme volatility. All sort of things you can see on days like this, right? First of all, prices opened some 75 points higher in Nifty, and it went to some 11,340 region. So that was some 130 point of rise, and then came the huge sell-off, right? And Nifty at a time was, that is a cash Nifty at a time was 350 points down, and towards closing we saw some little bit of recovery, and Nifty closed just 57 or 60 points down. So looking at the close, you cannot gauge how extremely volatile today's market was, but nonetheless that was the case. Sensex at a point of time was down by over 1,000 points today, and then it recovered almost 70% of its loss, and it was seen to be down at 250 points. Towards the closing, it also showed greater volatility. So that is how things are panning out here. What can we expect going forward from here? Now, looking at the chart, we can say that the structural bull market is not destroyed, but the structural bull market is injured, right? Prices have been trading below 50-day moving average for 3 consecutive closings. Last time it occurred, it was in first week of July. And not only that, the series of higher bottoms have been broken in Nifty. So chances are high that, and these things never occurred in many days, right? When was the last time that Nifty was? When was the last time that Nifty was? Nifty showed that kind of volatility. It was in third week of or fourth week of February, and that's it. So going forward, the volatility is likely to rise, and we are expecting some weakness in Nifty as well. And most of the stocks are not looking good at this point. Very few stocks are still holding their ground. Let me show you the charts of TCS. Here it is. This is the chart of TCS. Yeah, TCS is one of the very few stocks that held to its ground today, and prices closed at new lifetime high. So TCS remains one of the few outperformers. In fact, most of the large cap IT stocks are good, still good. Infosys will qualify in this category, although Infosys saw some weakness, and after making a top at around 740 region, it has retraced some 5%, and right now it is trading at 705. But the primary uptrend is still intact, and these kind of pullbacks may be taken as a buying opportunity. But these kind of stocks are rare right now, and most of the stocks are structurally weak. So first of all, let us take a look at these stocks. Those are still likely to outperform going forward on the higher side. So large cap IT stocks, TCS and Infosys are one among them. For TCS, we would like to keep a stop loss at here, which is the 2140 region on closing basis. So unless TCS closes below 2140, the uptrend is likely to continue. For Infosys, we are not recommending to buy Infosys right here because the stock is still in a pullback mode. But if today's high is taken out, today's high is at around 718 region. So if today's high is taken out, that will be a perfect buying opportunity. And in that case, stop loss will be at 692 region. So large cap IT stocks are no doubt a buying candidate at this moment even. For FMCG, you can see that certain FMCG stocks like Dabur, like ITC, have not broken as yet, and they are providing a little bit of support to the Nifty. And going forward, we can expect these stocks to rise even further. So for ITC, we would like to keep a stop loss at around 295 region. Currently, the prices are 304, and the not live high, but the recent high of 320 could be the target for ITC. For Dabur, Dabur also saw some good sell-off today. In fact, it made a low at as low as 430 region before closing at 455. Also, the stock is in a pullback mode, but we need to have a closing at above 400 at 460 region for the stock to resume its uptrend. So we are recommending a buy above 460 for Dabur. Overall stop loss will be at 450 on closing basis. If that stop loss is not taken out, then chances are high that the overall primary uptrend in Dabur will continue. Mahindra is a stock that is closely you should watch it very closely. And the overall structure is extremely bullish. Even it survived today's big sell-off, although it made a low at around 875 region before closing at 960 region. So that is a huge volatility that occurred today. We saw in Mahindra, but extremely important is how the stock recovered from the intraday low. So Mahindra and Mahindra is a strong buying candidate even in this market condition, and you have to keep a stop loss at around 930 region, and a target of 980 is possible, and after that the 1000 is possible for Mahindra. So Mahindra is also one stock that will be in our watch list. And last but not the least, as I mentioned in our previous webinar, that pharma stocks are likely to outperform. And we are seeing that although the best candidate in that sector, which is Sun Pharma, has not appreciated in price this week, but the structure is still bullish. It is refusing lower prices, and at around 625 region, Sun Pharma has a very strong support. So either you have to buy on pullback, keeping a stop loss at around 600 region, or you have to buy above 650 with a stop loss at around 630 region. In both cases, 680 will be the target. And if prices go to that level, then it will be new price in past 1 year. So the overall uptrend is likely to continue. Now these stocks, those I mentioned, the large cap IT stocks like TCS or Infosys, the FMCG stocks, one or two auto stocks like Mahindra and Mahindra, and one stock from pharma sector, which is Sun Pharma, are not the general rule. These are the exceptions. These are the outperformers in a general weak market, right? Now most of the stock, most of the time, are likely to go lower going forward because the structure of the bull market has been hard. The series of lower top and lower bottom is visible on daily chart, and the higher bottoms have been punctured. So we are expecting weakness going forward. And today there was some huge volatility in terms of some banking stocks like Yes Bank, some NBFC stocks, housing finance stocks like DHFL, and these stocks lost from 20% to 50%, which is huge. DHFL lost around 42% on closing basis, and with it brought down almost the entire NBFC industries. We saw a huge sell-off in Bajaj Finance, Bajaj Finserv. HDFC Bank, to some extent, it held its ground, but entire NBFC sectors were extremely weak. And there are some fundamental reasons. Maybe the sell-off was driven by some rumors, but that is not the case we are interested in, because whatever be the reason, we are followers of price, we are followers of trend, and we have to concentrate on the trend. And the overall structure of the bull market has been harmed, has been destroyed for the time being. So the NBFC stocks, so the banking stocks, private banking stocks, are most likely to remain weak going forward. Yes Bank lost some 30% today on closing basis. Maybe these reactions are I should say overreaction. The news, there was some fundamental news. There was some news of its chief working of chief operating officer, CEO, not getting an extension from the RBI. But we don't think these news warrant so much of selling. The sellings were driven by sometimes they were driven by margin calls, sometimes they were driven by algos. So we are not either interested in the reason behind those movements, but at the end of the day, the stocks closed and the stocks lost from 20% to anything 40% or like that. And these actually breaks the structure of the bull market. And any rise from here in Nifty or in private banking stocks or in NBFC stocks will probably meet a lot of resistance on the upside. For Nifty, we can say that Nifty today closed at around 11,140 region, and nearest resistance is at 350 region, then 500 region. So all these regions from now on will act on resistance, will act on important supply zones, and we can expect a lot of sell-off in those regions. And during that course, all these stocks, for let's say Tata Motors, TVR, Tata Motors also closed below its recent low today. So is Tata Motors TVR. Maruti is already weak. So all these stocks, except to some extent steel is still showing strength, like Tata Steel, like JSW Steel. These are not weak as yet, but most of the stocks are likely to face stiff resistance going forward. So that is the overall view. And what wonders me is that although there is the global market is trading at its lifetime high, and the global cues are also very strong, but despite of those strong global cues, our market is coming lower. In fact, what happened today is typical of a weak market, because we got a higher opening today. Market opened at around 70 points higher, then went to some 100 point higher, and then came the sell-off. So we got strong opening, but the market actually failed to hold on to that opening, and this does not augur well to a bull market. A bull market is characterized by a weak opening and strong closing. So this is exactly opposite what is happening out here. Now, what kind of support can we see? An important observation is that 200-day moving average for Nifty is at around 10,750 region. Over the next 1 week or so, it can go as high as 10,800 region. And towards the first week of September, there was a gap between Nifty and its 200-day moving average of around 1,000 points. Nifty was at around 10,700 and the stock was at around 11,700. So this is a gap of around 10%, right, in Nifty. And historically, we have seen that whenever prices has gone higher, as much as 10%, there have been a significant correction. And this is the correction that is occurring right now. So chances are high that this is only a probability, but the 200-day moving average of 10,800 regions might be touched by Nifty, and today's low of 10,866 may be broken, not this week or not in extremely near future, but over a period of time, this is possible that today's low could be broken, and we are at the early stage of bear market. So we have to manage the risk properly. Maybe lots of shares we are holding in our demat, or we have to use strict stop loss with that. And if prices continue to stay below the 50-day moving average for Nifty, which is at around 11,350, then the odds of the pullback continuing will rise. So that is how we have to manage the risk. Most of the trades right now will be done from the short side. We have to sell off the strength, and we then have to buy on cover our short position on weakness. And most of the stocks in private banking, in NBFC stocks, are likely to show weakness going forward. So this was our opinion for the next week. I hope you will find it useful, and you will trade accordingly. You have to use your own judgment. You have to do the risk management properly. You have to trade with proper stop loss, and let's see how things pan out going forward. You can see the recording of this video in our YouTube channel, and if there is any issues you can raise, and I'll be very happy to reply to your queries regarding any question, regarding any stocks or stop loss or whatever. So signing out for now. See you tomorrow. See you next week. All the best.